Welcome to Investors Insights. Our topic today is bearish politics, bullish corporations. We appreciate you watching this as we try to provide information and news that will rise above all the media noise that you hear out there. And on that note, let me talk about this because the news has been alive and well. We've heard a lot about Watergate. Everybody agree? Oh, yes. And Bobby, you chimed in as soon as I said that in the early morning meeting and made some points about that. Talk about that.
Yeah, like you said, Watergate was talked about last week. And as investors, it's important to show we're in different times. Back in the 70s, you had out-of-control inflation. You had gas prices that had tripled with the turmoil in the Middle East. You had -3 GDP. That's completely different. And so when Nixon was being impeached, the economy was pretty bad. Right. Now, it's a great economy. Right. I mean, we have great earnings. Also in Europe, European earnings are best in 10 years.
You and Ashley had some dialogue about Europe's coming on strong as well, so across the globe.
Exactly. So we've got a great job in the housing market with great growth. And so we're in a completely different time than we had the 70s when Nixon was being impeached.
The market can withstand a little uncertainty.
Yeah. So and that's why we chose the topic, bearish politics. And then let's talk about the bullish corporations. And let's also talk about from the standpoint, and this has to do with government as well. You brought up great points, and Ashley as well, about the Fed and what's taking place there.
Yeah, that is definitely a part of the government that's kind of a little bearish. This week we're going to get the meeting minutes of the Fed, the last Fed meeting. And that's important not because of interest rates. I think the market is priced in the short end of the curve going up. The Fed has a $4.47 trillion with a T dollar balance sheet. 1.8 trillion of that is in mortgages. And so really when an investor or an individual goes out and gets a mortgage, that's long-term, not short-term. When a corporation borrows, that's typically long-term. So the Fed's impact on the long-term interest rates is with this very large balance sheet. Right now, based on dividends, they're buying about $112 billion worth of bonds every year. And so how they do that, how they reduce that balance sheet is very important and much more of a black box on how it's going to happen. I mean, that's what's going to be very important, kind of the nuance of all of that.
So individuals need to keep their eye on that long-term rate.
Exactly. Right. Yeah. The short-term rate, the market, I feel like has digested and expected. It's that long-term rate.
And we've talked about that in the vlogs.
Exactly. Yeah. It's that long-term rate that's going to impact individuals much more than the short-term money.
Right. Well, one thing I love about our meetings too is one of you will throw out what I call the hand grenade news, and actually you threw out about appointments with the
By
Fed.
the president, that's right.
Talk about that.
Trey's so right. I mean, 10 years ago, the Fed was only $1 trillion, so it's quadrupled. It's so much bigger. But on top of trying to rein that back in, make it smaller, President Trump's got 3 appointments coming up on the Federal Reserve out of the 7. Statistically, that's a major move of what we could put in there. So not only are you trying to manage to it, you're going to be appointing other people while you're doing it.
Right.
It's kind of like building the airplane while you're flying it.
Right.
And this can be very interesting.
Yeah, it's hard to say how it's going to be unwound because we don't know who's going to do the unwinding.
Absolutely.
Right. So that's massive uncertainty.
Sure. So those are points we wanted to make to you today. We appreciate you taking time to watch, and hopefully it's been very beneficial. We also appreciate those of you that continue to communicate with us through in-person and on the phone, as well as social media, LinkedIn, Facebook, Twitter, the news that we're putting out there. And on that note, we hope you have a great week and that you keep an eye on those long-term interest rates, and especially if you're looking at mortgages. So take care. Talk to you soon.